Good evening, everybody. Stan, my voice is audible enough.
Yeah.
Right. So the last time we met, we talked about introduction to reclaim blocks, where I showed you guys the reclaim blocks, and I also emphasized on the breaker blocks. I think one thing I didn't mention among all of this is the mitigation blocks, which I purposely wanted to keep until today's class so that it doesn't get overwhelming or too much at the time. Right? Now, before I start, I want to start with the mitigation blocks before I go back to other PDRs. Now, I want you to understand that the mitigation blocks are just, I want you to remember the mitigation blocks with as MB. Remember MB with what? Continuations. Remember MB with what? Continuations. Now, remember, with the knowledge of market structure, when we have price coming, putting in series of lower highs and lower lows, remember lower highs and lower lows, lower highs and lower lows in a downtrend, right? Just like this. Now, one thing or one pattern that has consistently played out in the market is the pattern that if price should break through a low like this forcefully, remember that this is a downtrend. It's what I'm doing here now is very different from this. What I'm doing here is very different from this, right? You can see that here, a higher high at this point. This is a higher high now. This is a higher low. Why is this a higher low? Because it put in what? A new high. So it's just like we have price in an uptrend. Let's say something like this. So this is just like we have price in an uptrend, and then what happens? All of a sudden, character was changed, right? Taking out the demand zone, and then price comes back to mitigate that demand and start selling. That is an example of what? A breaker block. Now, it's very different from the one that did not want to break structure. Instead, it is just continuing, right? So this is what the mitigation blocks look like. Now, it is very confusing because it is easy to mistake mitigation blocks and breaker blocks, or to even mark out mitigation blocks in an improper way. Out of all of the PDRs that you have, mitigation blocks are the trickiest, right? One thing I want you to remember when you're talking about mitigation blocks is imbalance. It is very, very important. Imbalance is very important when it comes to mitigation blocks. This is a downtrend. Let me give an assumption for an uptrend first before I continue. Now, let's say price is coming in series of what? Higher lows and higher highs, as in an uptrend, right? It is assumed that if price should break through this previous higher high, if price should break through this previous higher high and it is retracing back to it, right? It is assumed that if price breaks through this previous higher high with an imbalance, like with an FVG, which means a long candlestick that is uninterrupted, a bullish move that is uninterrupted, should be what puts in a new high, right? So price should break through this particular point, which is the previous higher high, with an imbalance or an FVG, just a long uninterrupted move. It must be an imbalance that takes out the previous high. When this happens, it is assumed that when price comes back, it will make a continuation, right, with that high that was cleared. Look at what happened here. This is a continuation. This is very different from a reversal when price was a bullish order block, does what? Turns to a bearish breaker block. You can see that this is a reversal. Breaker blocks are for reversals. Mitigation blocks are for what? Continuations, but they are very, very what? Very, very alike. Reversals, breaker block, right? Mitigation blocks, continuations, but they are very alike, right? So it is assumed that if price should take out a previous higher high in an uptrend with an FVG, it creates a mitigation opportunity on the higher time frames. This is very, very important. You cannot try this on the 15 minutes. Never, right? You cannot try this on 15 minutes. Even 1 hour is risky. If you're going to be trading mitigation blocks profitably, stick to the 4 hours. Like, you have to stick to the 4 hours, whether you're creating buyers. I think people that do this, that trade key levels, right? Majorly self, literally what you see people talk about when they talk about key levels. One very important aspect of key levels is this mitigation blocks, where they talk about their A levels and their V levels, right? What forms their A level is what? Is this mitigation blocks in an uptrend. What forms their V levels is the mitigation blocks in a downtrend. That is a very important aspect of those people that trade key levels. And you notice that people that trade key levels, that was on the daily time frame. This is because these mitigation blocks are not things that you just want to the 15 minutes to talk about or just want to the 15 minutes to do your thing. They must be strictly what traded on the higher time frames. They have a good win rate, and of course they are very powerful, right? They are very powerful. I think in the hierarchy of PDRAs, mitigation block is up there, should be number 2. I'm going to drop the hierarchy of PDRAs after this class so you guys can take a look at it, right? Mitigation blocks are what? They are up there. They have very, 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 very good win rates. But strictly, like I said, must be on the higher time frame. And secondly, what would make you say that this is what a mitigation block is the fact that it breaks a previous higher high, or it breaks through a previous lower low with an FVG or an imbalance. It must be an impulsive move that takes out the previous low, or an impulsive move that does takes out the previous high. But it is always in continuation of the trend. In a downtrend, the mitigation blocks you find are mitigation blocks that are continuing the downtrend. In an uptrend, the mitigation blocks you find are mitigation blocks that are continuing the uptrend, right? So usually you notice that the higher highs in an uptrend, the lower lows in a downtrend. For continuations, these are mitigation blocks. It is very different from something like this that is a reversal, whereby a higher low is broken, and then you're anticipating that price pulls back into that other zone and does sell. In this case, this is reversing the markets from bullish to bearish. I told you that breaker blocks, what do? They change the initial purpose of a block. If another block or a demand zone was to buy, and then price breaks through it with little or no reaction, automatically, what does it form? A bearish breaker block. Failure of a bullish order block creates a bearish breaker block. Failure of a bearish order block creates a bullish breaker block, meaning that they do they change trends. Bullish to bearish, bearish to bullish. But these mitigation blocks, what do? They continue trends, right? Price breaks through a previous high with an FVG, and then what do you anticipate? That it comes back to that point as a key level, mitigate it, and continue that trend. So you have to remember that mitigation blocks do they continue, they don't reverse. Okay, they don't reverse. But then the reclaimed block, which I talked about, I said that when another block like this is being created in the market, or a demand zone. In the case of a bullish order block, now I'm going to call it a demand zone or a bullish order block, right? The purpose of every order block in the market, every bullish order block in the market, or every demand zone in the market, is to send price back up. Because you understand that in an uptrend, we need to have we need to have price moving in series of higher lows and higher highs, higher lows and higher highs. which means that every low in an uptrend are what protected. And because they are protected, we don't want to see price go what below them. And since we don't want to see price go below them, it means that every low would what put in a new high. They should be what able to send price what back up. So since every low should be able to send price back up without going below it, it means that every low in an uptrend or those demand zones found in an uptrend, they have a duty towards take price to the upside. Right? And now, since this has now failed in its duty to send price to the upside, right? Price broke through it. It failed to do what to take price to the upside. Instead, price was broke through it to the downside. What do you ask yourself? How was this particular order block broken? Was it broken with a reaction to price, or was it broken? Did price react to it before breaking? What do you mean by react to it? Price was coming like this, right? You said this, mitigate it, and then probably buy a bit before what breaking it. This creates what? This creates a flip zone. It is very different from when price just what breaks through without what any reaction to it at first. So you have to ask yourself, how did the price break this particular order block? Did it break through it with a reaction to it, or did it break through it without a reaction to it? Now, if price breaks through a bullish order block without a reaction to it, what does it create? It creates an opportunity for what? A breaker block. I told you that a breaker block is formed from the failure of a bullish order block with little or no reaction to it. So a very negligible reaction or no reaction at all on that order block creates what? Creates a breaker block. How is that represented? That when price now breaks through it just like this, it comes back to mitigate the breaker block or the previous order block that was filled, right? Mitigate the previous order block that was filled and does what? And sell just like this, right? But then one thing you have to understand, or one thing I have to mention, just in case I forget to say it when it comes to entries, is that of all of these PDRAs, the reclaimed blocks is one of the best, right? The reclaimed blocks is one of the best tested, proven, and trusted. It is very high up there. I think it should even be before the mitigation blocks. And this is because it's the last resort. Do you understand? Nothing can be formed from a reclaimed block except the change in trend. Nothing can be formed from a reclaimed block again. Remember that the failure of an order block gives you a breaker block, and then the failure of this breaker block gives you what? A reclaimed block. So most of the times, these reclaimed blocks are the last resort of price, and that is why you see that they are always of high probability. Do you understand? And that is why at times when a valid order block fails, I just ignore the breaker block opportunity and instead anticipate that the breaker block is what's failed, and then I look to what enter with the reclaimed block. This is because most of the trading opportunities you see on so many pairs, I mean in today's market condition, right? Your breaker blocks would not hold. That is like for sure. Most of the trading opportunities you see in so many pairs, synthetics and currency wise, your breaker block opportunities may not have what? High probabilities. So instead, I would advise that you just what? Wait for, anticipate that the breaker block gets taken out, and then you anticipate for what? The reclamation of the previous order block. Do you understand? There's no need participating in the move that does what? In the move that is taken out, which is what the breaker block move. Because you remember that what? How is this reclaim block now going to be formed? When price takes out everybody looking to do what? Looking to take sell opportunities from this zone. Price takes them out, right? And then comes back to reclaim the initial block at this point. Comes back to reclaim it and continue towards to the upside. This is what the reclaimed block looks like. Another block taken out with what? Little or no reaction. creates a breaker block, and then price takes out that breaker block, giving us what? A reclaim block opportunity. Okay, so remember the mitigation blocks, remember what? The reclaim block, remember what? The breaker blocks, and you remember what? The other blocks. Let's look at, I think I have some chart examples here. This is currently this is AUD USD current price action. You can see a very good example of what a reclaim block. Let me show you something. I'm going to cut price from this point, right? I'm going to cut price from this point. So here there's an order block that did was price was coming bearish, series of what? Lower lows and lower highs, lower lows and lower highs, and then all of a sudden this was the point at which it took out this high, right? This was the point at which this high was taken out. And then internally, we had a lot of things going on, because what happened, this would have not been another block I would have considered, by the way, because I taught you people that when price gives you a change of character, what do you wait for? You wait for another break of structure to confirm what the new trend. If not, you wait to see what price does. All right. But then internally, let's say that this is what another block that has met your criteria. And then what happens? Playing price, you notice that when price approaches that's your order block, that it actually takes it out. Right? You can see that at this point now, price comes to the order block of consideration, and what does it do? Okay, at this point, price comes towards the order block of consideration, and you can see that it just broke through it without any reaction to it, just broke through to the downside. Now, at this point, you'll be very, very confused, right? And you're like, okay, price has taken out my order block with what? Little or no reaction. In this case, it's what? A no reaction. I think this is a news move that just broke through to the downside. The next thing that most traders will be anticipating, which is right to do, but I told you to ignore for now, is what? The breaker block opportunity, which is this. The price comes back and does what? Pull back into what? The breaker block and sell, just like this. Remember, breaker blocks for what? Reversals. You can see price was what? Bullish like this. This bullish order block creating what? A bearish breaker block, and what? Mitigation blocks for what? Continuations. All right. Continuing now, people are looking towards take sell positions from this point, and then what happens? Playing price, you'd see that price just came and broke through, just like this. Price pulled back and did what? And broke through. Everybody looking to take what? Positions from this point have been stopped out. You can see now, everybody looking to take positions from this point has been stopped out. This means that a breaker block has been filled. Now, I told you that when a breaker block is filled, what does it create? It creates what? A reclaimed opportunity. How do you trade this reclaimed opportunity? The same way that you would have traded what? The initial order block. Remember that this is how you would have mapped out your order block before it's filled, right? You would have put your buy 2 on it, and wherever you're targeting, just like this. The same way that you would have mapped it out, that is how you map out what? The reclaimed block. Same level, just like this, right? Same level, just like this. Now, playing price, you notice that price now came, mitigated the reclaimed block, and what happens? Straight to what? Straight to take profits, right? You can see at this point what happens? Take profit hits. This is a very good example of what? A reclaimed block. Even currently, now the price has what? Put in another high at this point. This has confirmed the new trend for me. This is a trade idea I'm looking at currently on AUD US. This particular reclaimed order block here. This is where I'm anticipating that when price comes back to this zone, I'm going to take a buy from, right? You can see this is another block that was put in a new high, the first low, the first high, and then price came back, right? Then put in what another high. Okay, so I'm looking to what take a buy from here when price comes to this point. This is what another example of a reclaimed block. All right. Looking at other examples that earlier marked out, we have what we have this particular one at this point. Now, if you look at this, this is a demand zone. Yeah, this is 4 hours. So permit me that the chart is a bit compact, right? This is a supply zone that we have at this point that is mitigating this other supply zone here, right? This is the next supply zone. And you can see what happens. Price comes to it, breaks through it, and does what? Starts selling. Okay, now at this point, what do you anticipate? That when it comes down like this, what happens? It pulls back into that supply level and sell. Now, there are two things that I want you to pay attention to. First of all, a reclaimed block can be like this, whereby price breaks through, comes back, does something like this, and continue. This is a good example of what a reclaimed block. This is one. Secondly, it can be something like this, whereby price does what? Break through, break structure before what? Coming down, coming back just like this. This is what another example of what a reclaimed block and what most of you call what QMR, right? This is another example of what a reclaimed block. So yes, it is valid if it breaks structure. It is valid if it doesn't break structure. The most important thing is that what the breaker block is filled and then the other block is pulled back into. They are both what reclaimed blocks. So long as the other block was reclaimed, it doesn't matter if another block or structure had to be what initiated before the reclamation of the other block. So long as price took out an other block with little or no reaction to it, took out the breaker block, and then comes back to reclaim the original what other block. That is how the reclamation blocks are. These are the reclamation blocks that was formed. So you can see that was what happened. Now, worthy to mention, I know we've not gotten to entries, but then I want to mention something. Reclaimed blocks can be used for continuations in price. If you notice, for most of you that would go back after this to your charts, you would see something like this, whereby we have a valid order block. Let's say this is a valid order block worthy of assumption, right? Now you'd agree with me that this is what an inducement level that pulled back into that valid order block. Now, if price takes out this inducement level, you know that whether or not this inducement level is valid to buy or to sell from, it is another block. At the end of the day, it is what? Another block. So if price takes this out, there are some chances that price will reclaim this level. So let's say it does something like this now. Price takes out this zone to mitigate an order block, just like this. You would notice that what does price do after it comes back? Can do something like this, then come back to this point and continue to the upside. For most of you that trade gold very well, you notice this pattern is what a bit consistent on it, right? Price mitigates what an order block, same direction, then reclaims what the inducement level for a continuation. This is how you can align both reclaimed blocks and order blocks. There are times whereby I miss opportunities, trading opportunities, other block trading opportunities. And then what happens? The reclaimed continuations now come in. If you guys monitor some of the setup that I post on my status, especially those of this girl, I think Jessica in particular, you notice that majorly this is what has strength. Reclaimed blocks has what continuations. They are very beautiful just like that because now you're sure of what the direction of the market, the next thing is what where to enter from. So yes, inducement levels can also what create reclaimed blocks so long as it's mitigated the valid order block. It must be coming from what? A valid order block. then this can be what a continuation to ride to take out what to put in a new higher high. So remember that it must what this initial mitigation must be on what on a valid order block. Okay. Then let's look at other examples here. Sorry, let me take this out. We have please do this in a minute to load. Okay, so looking at what we have here, at this point, this is an order block. Okay, this is another example of what another block that met criteria, this and that. But this is what I want you to notice, not the OB itself. Now, price was coming with series of lower lows and lower highs, lower lows and lower highs. And you'd agree with me that what this is a lower low, and this is what a lower high. This is what another lower low. Now, this first lower low has created what? This first lower high has created what? A supply zone and all of that. The price is what mitigating and reacting from. But if you look at what happened here, this lower low at this point was broken through with what? Price broke through it with no reaction. I told you that whatever breaks what the lower low must be what must be an unmitigated imbalance. It should be broken with an imbalance, like a straight impulsive move. You can see the difference between what happened here to create this low and what happened to create this other low. You can see this had like some retracement and corrections, right? So it must be broken just like this, impulsively. Maybe one or two candles, but it must be very impulsive. Create what a clear FVG for you to say that this is what a valid zone to continue what mitigation blocks. Okay, you can see something like this now. It must be what's broken impulsively. If price is taking out a level of a lower low, must be what's taken out impulsively. All right. Let me see if I still have more examples here. Okay, there you have price coming what's in a downtrend series of what lower lows and lower highs, lower lows and lower highs, lower lows, right? Before price finally was change character. And you can see what happened here. This was what this is a good example of what a mitigation block. And price went ahead to do what after this lower high, putting what another what lower low. You can see the point at which it broke through the previous lower low was broken through it what with this FVG. It must be very impulsive, significantly impulsive. Do you understand? For you to say that it is what a mitigation block. If not, continue every other PDRs. You cannot afford to make mistakes when it comes to mitigation blocks. The breaks must be what impulsive. You can see here you have what you have an impulsive break. Here you have what an impulsive break. Do you understand? Higher time frame impulsive breaks, right? And you can see what happens. The price pulls back into it and does what and sells just like that. All right. Let me see if I still have something here. Okay, yeah, I have a good example of what a reclaimed block. An order block, the price what takes out with no reaction to it, little or no reaction, remember. And in this point, there was literally no reaction to this zone. And what happens? Price what pulls back into it and comes back and continues. Failure of what a breaker block creates what a reclaimed level. That was exactly what happened here. There are like multiple examples on the charts. If you go back to the charts, you would see order block examples of order blocks. You'd see examples of what mitigation blocks. You'd see examples of what breaker blocks. All of them are here. Do you understand? But then I told you that I don't like to trade the breaker blocks in particular. Why? Which I mentioned is easier to just wait for the continuation. Now, this is a very good example of what I was talking about when I said reclaimed blocks for what? For continuation. Let's see what happened in this particular price action. Price came. Now, at this point, it created what? Mitigated the supply. Now, this supply would have been a supply zone or a bearish order block that you would have been skeptical to take sell positions from. Why? Because the break was just once, right? And then this was the inducement level at this point. This break was internal, right? It was nothing external yet. This was the point where we had one external break. Okay, so it's not something that is of high probability. But then why? What did I tell you? That when you have zones that are not of high probability, what do you wait? You wait to see what they create. Okay, would emphasize more on this when we get to entries, but I think I mentioned this in the last class. You wait to see what they create when price mitigates them. And in this case, price now mitigates this one at this point, right? It broke this internally, broke this second break, and then finally gives you what? That second external break that you've been waiting for to confirm this, right? Gives you that final external break that you've been waiting for. Now, if you look at this, if you should try to validate this particular demand zone, it would have met all of your criteria that validates the demand zone. A broke structure, it has an imbalance right before it, it's in line with market structure, it's in 50% of this particular price leg, everything that you'd want to mention. The inducements, let's see if you pull back into 50%, but I'm very sure it did. You can see now that the inducement did what? Pulled back into 50% of that leg internally, like everything has been what? Met. But now let's say in a case scenario whereby you now miss the move, you were not there when price came what? When price came to mitigate this zone. You probably can be doing anything, maybe you're in class or whatever, when price mitigates what? That demand level. What did I tell you? I told you that the inducement level that it creates, the inducement that was taken out for price to mitigate that demand level can be what? Can be used as a continuation zone. This is you using what? Reclaim blocks for what? Continuations. So long as, importantly, so long as those inducement levels were taken out with little or no reaction to them, right? They must be validated the same way you validate your reclaim block. It's not like when price now mitigates your demand, whatever thing that your inducement level do, you just look for a buy there. That's not what I'm talking about. You're taking those inducement levels as reclaim blocks, meaning that they must be created with what? Little or no reactions, just like your every other day reclaimed blocks, right? You can see this one now, the price just broke through it without what? Without reacting to it. That is how it should be, right? And then mitigates this demand and pulls back. This is now what you anticipate, that price comes back to this zone, mitigate it and what? Continue to the downside. Inducement levels as what? Creating what? Reclaim blocks, continuations. And what did you see happened? After price did that, it did what? It pulled back, mitigated that zone, and did what? And sold down, right? Just like this. Reclaim blocks for what? Reclaim blocks for continuations. All right? Even at this point here now, there is what? This is a good example of what? A reclaim block. This is what? A reclaim block. Continuing again, you have, let me see if I still have more examples mapped out at this point. Okay, yeah, we have what? We still have what? A reclaim block. At this point, another block that was taken out with little or what? Or no reaction. And then price comes back, pulls back into it, and does what? Puts in a new high. Just like this, right? So it is the failure of a breaker block that creates what? That creates these reclaim blocks. You can see order block opportunities, you can see breaker block opportunities, you can see reclaim block opportunities, you can see mitigation block opportunities. So this time around, the importance of it, you can see here now, this is a good example of what? A good example of an order block that has met your criteria at this point. But then what happens? What does the order block create? A failed what? A failed order block, which you now come back to what? Reclaim, which you now come back to using claim opportunity to put in what? A new high. Now, if you look at the market like this, somebody talked about trying to mark out order blocks, and they were able to get whether 5 order blocks in 2 months, in 3 months. I've forgotten what the person talked about, right? If you look at the market like this, you're no longer limiting yourself to looking out for sweep, breaks, and inducements when it comes to other blocks. You're looking out for mitigation block opportunities as well. You're looking out for reclaim block opportunities as well. This way, you get better trading opportunities because the presence of options reduces desperation, right? You're no longer desperate to catch a trade that you now start forcing the validations. Oh, you can even leave another block to see if it becomes reclaimed. Do you understand? Things like this, it puts your mind at ease and makes you want to trade in a better way, right? Remember what I talked about. The breaker block, the other block, what it fails with little or no reaction, creates breaker block. Breaker block fails now, guess what? Reclaimed block. At the end of this class, I'm going to send you guys a list of the PDRAs in their order of importance, and then we will meet. Okay, we're meeting on Friday. We'll meet on Friday. What happens? We'll now what look at them and explain what the importance. Chat walkthrough, and I think that should be it for this 4 PDRAs, right? And then more examples on the mitigation blocks as well. But then this is the basic explanation behind all of them. Most importantly, one thing that you shouldn't go to bed without remembering is the fact that the mitigation blocks must be broken with what? With impulse. Like it must be very fertile. The price breaks through it with an imbalance, an FVG. Do you understand? Before you can mark it out as an area to continue the trend, and they must be traded on the higher time frames. This is because you know the price is very fractal. On the 15 minutes time frame now, you can see something looking like an FVG because they are formed by many candlesticks. The lower you go in a time frame, the more candlesticks you see. Because one candlestick on the 4 hours time frame is what? Is 4 candlesticks on the 1 hour time frame, which means it is 8 candlesticks on the 30 minutes time frame. And it is what? 16 candlesticks on the 15 minutes time frame. This means that something that is just one candlestick on the 4 hours time frame, you'll be seeing 16 candlesticks on the what? On the 15 minutes time frame. This is why it is easy for the 15 minutes time frame to create something that is what? Not in line with what the 4 hours is doing. Do you understand? So that is why you can see something that looks impulsive on the 15 minutes time frame, which is meanwhile it is just what? One candlestick on the 1 hour time frame. So it's very tricky to trade mitigation blocks on the 15 minutes time frame. If you're ever going to even do any of those, maybe when we get to entries, I'll talk about the ones that you can do. Majorly the other blocks and the reclaim blocks are the ones that you can use as continuations on lower time frames. But when it comes to trading, like trading, mitigation blocks should be what? Strictly on the higher time frames. They are key levels. Do you understand? So they're not things that you can be turning on the lower time frames. But majorly this is just a proper introduction and all of it to this for PDRAs, right? And the breaker block, you can, I'll show you guys more examples on BBs, but usually, like I said, those breaker blocks are usually traded on, I don't usually trade breaker blocks again. When I used to do that was when I was trading them on EUR, GBP, I think, and the rest of it. But of lately, you notice that the market is creating more of reclamation blocks, right? Which means that those breaker blocks you're anticipating most of the times they get taken out. I don't even think anybody is still doing BBs at the moment, right? Most of the times they get taken out. So instead of just participating in that move that is taken out, what the other block feels, you just wait for what? For a reclamation as your continuation, right? A reclamation opportunity. So that brings us to the end of today's class. I don't know if what I said is overwhelming for so many, but then it's in the easiest way possible, right? I use the most basic examples possible. If you have any questions, as usual, you can drop them on the group so that I'll go through it immediately after the class ends to resolve them. Then a very important announcement. I announced the class for the slow learners to run through demand and supply again, in case you are on the call and you think that you're having issues with demand and supply zones. On Saturday, by I think we should do, since we have a class on Saturday already, so on Saturday by 7 p.m. or sorry, 6 p.m. I think I have something to do by 7. So Saturday by 6 p.m. Let's just have a 1 hour class going through demand and supply validations and all of that, chat examples, just like we did on market structure that time, right? Hopefully that clarifies a lot of things. But going through the recorded sessions as well also helps you understand. Those people that are understanding and catching up, they don't have two heads. All right, pay attention and put in as much focus as you can when you're watching live sessions. Watch live sessions, record your smart questions, emphasis on smart questions, because most of the things most of you guys are asking, sometimes you just I just answer because I have to, but it just looks like you just want to ask something. All right, but that's by the way. So every question that you have, send it to the group and then we'll go through it. If I have not answered any of the previous questions, you can tag me to it again. I think I'm free tonight. All right, let's go through everything. And then